Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody had a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're down about $260 for the week. We are down $213 for the month. We're down $324, down 1.38%. For the 3-month mark, we're up $2,200, up 10.5%. For the year, we're up 448, up almost 2%. And then all-time since April 13th of 2018, we are up $2,700, up 13.3%. Next, starting off with one of my personal favorite stocks, Realty Income, down big today, down 3%. We have 16 shares, about $970 of market value. Average cost is $46.31. 4% of the portfolio is in Realty Income, down about $30 today, up over $200, up 30% on Realty Income. This is one of my favorite stocks. It's my favorite real estate stock. It will be a very big position in the portfolio because it pays monthly, and I love the structure of the business. Very bullish on the company and the tenants and diversification that it offers. So I'm hoping to get this up to probably 8 to 10% of the portfolio and keep it there. This will be one of the larger positions in the portfolio just because I'm such a big fan of how the business is structured. Next, we have Coca-Cola. This will be the biggest position in this set of months. We have 21 shares, $1,100 of market value. Average cost is $51.39. 4.7% of the portfolio is in Coca-Cola, down about $48 today. Up around $24, $25. Total, we're up 2.4%. Coca-Cola is a dividend king. It is my favorite soda, and it has a phenomenal track record of growing dividends. So this is one of those companies that I just want to buy and hold forever. I never plan on selling a share of Coca-Cola. Next, we have FRT, the real estate stock for this month. I have one share of this king, $80 of market value. Average cost is $113.40. So we have a great cost down average opportunity there, as it's been there for a while. It's been down for quite some time just due to the pandemic. It got slammed and it never truly recovered up to its highs. Only 0.36% of the portfolio is in FRT. This will be one of the smaller positions for this set of months, not because I'm not bullish on the company, just because there are other ones that I like better. But I do want the stability of a dividend king. They have a great track record of dividends and increasing, so I do want them. They're just not going to be a huge position for me for this set of months. But we're down about $2 today, down $30 total, down about 27%. Then we have Altria. We have 151 shares, $6,000 of market value. Average cost is $43.59. We have 27% of the portfolio in Altria, down $100 today, down almost $500 total, down to 7.46%. But it does pay a nice, generous dividend. Because of our share count, we get about $130 from them every quarter that they pay us. So, it's great passive income. Can't complain. Excuse me. Can't complain about that. And as you guys noticed, you probably noticed I have it set up in a different way. Usually Emma's at the top. I have it now. I have it set up to stocks that I want to buy the most. So that means that right now I think Coca-Cola is the best buy, and then FRT, and then Emma. So I have it set up in a way that I don't want to buy more Altria. I'm bullish on the company. I like the product line. I like the company, but I'm over leveraged to that, overexposed to that company. So I'm going to not be buying it. I'm going to be, expanding my portfolio into my watch list or the one stock that is down the most in the portfolio, which right now is FRT. Next, we have AT&T, 126 shares. $3,600 of market value. Average cost is a little below $30, so a great buying opportunity there for me. About 16% of the portfolio in AT&T. I'm fine with that percentage. About $50 up today, down about 65 total, down 1.76%. Not worried about it. We have a great dividend payer here. Consistent cash flows. They are restructuring their business, which I'm a fan of. They're selling DirecTV, which is a decent asset for cash flow, but it's losing subscriber base. Makes me excited that they're selling it. They also decided that they're going to shorten the time the movies are in the theater, and they're going to go direct to consumer with their HBO Max offering. So I do like the restructuring that I'm seeing from AT&T. And that's why I'm so bullish on the company. I was bullish beforehand when they had, you know, the assets that I wasn't such a big fan of. But now that they're trimming those and refocusing their business, management really does seem like they're getting a real good hold on what they're good at and getting rid of the assets that they shouldn't have bought in the first place. So I really do like AT&T. It's going to be one of my main focuses this year. Next we have People's United Bank. This was my financial stock. We have 14 shares, $180 of market value, 1080 or 1090 is our average cost. 0.78% of the portfolio is in PBCT. We're down $1.33 today, up $27 total. Dividend aristocrat here. I bought this because it always pays near the end of the month, and last time I got paid by Altria, it was past AT&T's X date, which means I could have bought shares of AT&T like I planned, but it wouldn't have boosted my dividend income. So I bought PBCT because it's an alternative, pays the same month, pays near the end of the month, and it has a great 25-year dividend growth history. So that way I have an option if the ex-dividend dates don't line up that I can still boost this month's income, no matter when Altria decides to pay. So then we have AbbVie, which for me is overvalued. That's why it's below PBCT. But we have 60 shares, $6,200 of market value. Average cost is $72.22. 27% of the portfolio is in AbbVie, down $153 today, up $1,900 total, up 44%. It's one of those that I want to buy more of, but I can't at the current price because it's up so high. So I'm very bullish on AbbVie. I like the drug pipeline. I like allergen acquisition. I like the prospects for the company and the future cash flows. I'm a huge fan of AbbVie. I just don't want to buy any. I want it closer to $80 a share. Next, we have Lowe's. Same issue as AbbVie. We have 2 shares of this Quality King. We have about $320 of market value. Average cost is $100.86. 1.38% of the portfolio is in Lowe's. We are up $1.50 today. Down $1.50 today, up $117.80, up almost 60% on Lowe's. Wish I would have bought more at the price I bought it at. Same issue as Target. I'm honestly thinking about selling out of Lowe's simply because I feel like it's overvalued and I could get back into the stock or possibly switch it out if I'm more bullish on a different company. As of right now, though, I'm just considering selling it. I don't plan on doing that. I'm a huge fan of Lowe's. I love the dividend increase that I got. It just doesn't do me very good. It doesn't do me much good to have money locked in a stock that's up $60 per share from where I bought it. It's like the money's trapped in there and it's making me money, but I could reposition it to a different stock. Take the cash that I get from Lowe's, the $120, and put it towards something else and make more money. So that's kind of where I'm at. I want to hold Lowe's, but I understand the opportunity cost and what it's costing me having the money stuck in there as well. It's the same issue I had with Target. Next, we have Aflac. This is my favorite stock for 36912. We have 1 share, $43.40 is our market value. Average cost is $35.75. 0.2% of the portfolio is in Aflac. That's going to be a major position. I want it to be about 15% of the portfolio. Love Aflac. We are down $1.08. Today we are up total $7.64, up 21% on our share. I'm a huge fan of the insurance business and float. I've done a lot of research on Aflac and Allstate and MetLife, but I've done a lot of research on insurance companies. But the one that I like the most is Aflac. I looked into Travelers as well. Next, we have Black Hills, my utility. We have 2 shares, $120 of market value. Average cost is $60.53. About 0.5% of the portfolio is in Black Hills, down $3 today, down 75 cents total, down 0.62%. So not worried about this. I look at utilities as bonds because they're not very volatile, and They offer steady cash flow because people need water, they need electricity, just to live everyday life. So I see it as a very good steady stream of income, and Black Hills will be a decent position in the portfolio given some time. I'm a big fan of utilities, and I might add a couple more. I've looked at a lot of different ones like Duke and Dominion. They just didn't have the dividend growth that Black Hills does, so I'd rather hold something that's paid 40 plus years of dividend increases instead of 10 or 11 like Duke or Dominion has. Next, we have McDonald's. This is one of my personal favorite stocks as well. We have two shares, $420 market value. Average cost is $214.90. About 2% of the portfolio is in McDonald's, down $8 today. Total down about $10, down 2.23%. McDonald's is one of my personal favorites. It will probably be the second largest position right behind Aflac, simply because I love the business model. I eat there all the time, and I love the domination that they've had of the fast food market. So, I love McDonald's. Next, we have J&J. We have two shares of this king. 310.44 is a market value. Average cost is 135.79. 1.34% of the portfolio is in J&J. We're down $4 today, up $39, up 14% on two shares of J&J. Then we have Exxon Mobil. This is at the very bottom of this set of months because just like Altria and just like AbbVie, I don't want to buy anymore because they're overvalued or I have too much in the stock, and right now I have way too much of a percentage in oil for my taste. I know I'm still bullish on the company. It's just I don't want it to be more than like 5%. So instead of selling off ExxonMobil and losing dividend income, I would rather just pour money into something like Aflac or um, McDonald, just other options. Doesn't mean that I don't like the company, because I am bullish on it. I wouldn't hold it if I didn't. It just gives me significant income, and I'm happy with how much it pays. And I will add some more to it in the future. I would just much rather add two other positions at the moment. So I have 86 shares of Exxon, $3,500 of market value. Average cost is 52.74. About 15.5% of the portfolio is in Exxon Mobil. $32 were up today, down about 960 total, down 21%. So I have these listed and how I want to buy them. So, well, now I do because I didn't realize that. I like AbbVie more than I like PBCT. But yeah, so definitely Coca-Cola, AT&T, and Aflac are going to be my mainstays. But if other stocks like McDonald's, Black Hills, or something else in the portfolio that I'm not over leveraged to is a buy, I definitely will scoop up shares. So the main focus is for the portfolio this year. Currently inside the portfolio are Realty Income, Coca-Cola, AT&T, and Aflac. So now we're going to look at the watch list, which you'll notice does have some changes to it. So I switched out Kimberly Clark for Allstate, and then I switched Allstate out for McCormick. So I like McCormick at $93 a share. I would want it to be down a little bit more, but I'd buy it because it's a great dividend aristocrat. So they are a leader in the spice market at $93 a share. They're not quite low enough for me yet, but I do want them. They're a great dividend aristocrat. They dominate their market. And they're a dividend, like I said, they're a dividend aristocrat. So that's really what I look for. I look for quality companies that lead their market and have great dividend growth. And I get all of that with McCormick. Next, we have Pepsi, 143. Not low enough for me to buy it, but I will buy it just because I want to own Pepsi. Colgate at 84. Not quite low enough for me yet. Procter & Gamble at 136. $10 upside, I'd probably buy it here. 3M at 171. About $10 of upside, not quite enough for me yet. Disney is at 177. So about $10 of upside there. I'd buy it, but not quite yet. Berkshire Hathaway at 228. Not quite enough upside, but again, every stock that I have on my watch list, I really want to own now. So if I get an influx of money, I'll probably just be pouring it into the watch list currently and buying everything that I want to own in the market and then focusing on the stocks that I really want to own within the portfolio. So, and just an update on where I'm at financially. So, right now, I just got the $600 stimulus that's staying in my savings account because I'm building up my emergency fund. So right now I have about $2,100. My goal is to get to 5K before I start investing, but I cashed out an old 401k, and that had about $2,800 in it. So altogether, I'm very close to my goal of 5 grand. I might bump it up to six or seven, just so I have a little extra in there for my own peace of mind. But then once I hit my goal of five to $7,000 of saved cash in the bank, I'm kind of recouping from the car accident still financially. But once I hit my goal, I will be putting money back into the market. So I will be adding. I think the budget was about $500. If I'm living by myself, have my own apartment and all my own bills and whatnot. If I don't split it with somebody and have a roommate, um, about $500 a month will be deployed into the market, buying the next month's stock and buying the stock that's down the lowest, that I think is the best value. So um, I am super excited. I'm happy with the stocks that I've added, um, and I'm happy to be back. Sorry for the hiatus. I only worked 3 days uh, for the last 2 weeks, and I kind of just took a little break. But I plan on doing videos every single day now. I miss it, and I know people were asking a lot of questions. So sorry for the hiatus, but I'm getting my money where it needs to be, so I'm financially set up enough that I can reallocate capital to the stock market. I was over leveraged and to the market because I had too much cash in there, but now I'm recouping my savings, and that's really what my goal was for this month. Honestly, I'm ahead of the game because I cashed out that 401k. I wasn't planning on being back until March, but after the second check in January, I should have above 5k, and that should any excess over 5 grand should be going into the market. So I should be adding money beginning in February at the latest. So I'm super excited. But with that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, that dividend guide, when you do hit the bell notification so you don't miss any updates. I will be doing portfolio updates Monday through Friday. I have videos scheduled out all week already um, that I recorded on Sunday. So I have 2 videos coming out a week, 2 videos coming out every single day this week, and I'll try to keep that schedule as much as I can. So I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.